This is the latest in a series of educational webinars offered by IndexUniverse.com, the leading independent authority on indexes, index funds, and ETFs. My name is Matt Hogan, Managing Director of ETF Analytics for IndexUniverse.com, and your host for today's webinar. Our goal today is to present new research on what has been perhaps the hottest topic in ETFs over the past year, which is leveraged and inverse ETFs. This is a topic that's really seen a lot of heat, but not a lot of light. I think the issue here is simple. These funds are designed to deliver a multiple of an index return over a single day. But if you hold them beyond one day, the returns you achieve may not be the returns you expect. Now, the math that explains why this happens is simple, and we'll get into it. There's also a simple but largely unrecognized way to manage your exposure so that your long-term returns line up with the one-day targets. Joining me today to help shed light on some of these questions is Joanne Hill, the head of investment strategy for ProFunds Group, a leading issuer of leveraged and inverse products. Joanne is the perfect person to lead this discussion. Prior to joining ProFunds, she worked for 17 years with Goldman Sachs, where she led the firm's research into the institutional application of ETFs, futures, options, swaps, and index portfolio trading. Joanne has published extensively on quantitative investment topics and derivatives, with recent articles in the Financial Analyst Journal, the Journal of Portfolio Management, and the Journal of Trading. Today, though, Joanne will be presenting research that she published in a study in the Journal of Indexes in September and October. The study, which is available for free at www.indexuniverse.com/JOI, was so good that we thought it deserved full webinar treatment. It looks at more than 50 years of returns to provide a better gauge of what investors can expect when holding leveraged and inverse products over the long term. It also explains how the investors can rebalance their positions to maintain their desired exposure for periods of 1 month, 3 months, or even a year. Before I let Joanne get started, however, I just wanted to lay out a few words on how this webinar will work. To kick things off, Joanne will present the results of her research in a presentation that will last about 30 minutes. After that, I'll have a few questions for Joanne, and then we'll open things up for audience Q&A. As members of the audience, you can enter a question for either Joanne or I at any time during this webinar using the chat window on your screen. We'll answer as many questions as we can during the hour allotted. Joanne's slides, as well as a recording of this presentation, will be made available on IndexUniverse.com early next week. As registrants, we will send you an email when those slides are available. For those of you who have registered for CE credits, we will provide information at that time on how to gain those credits. With that, I'll turn it over to Joanne Hill of ProFunds.
Thanks so much, Matt. The chance to be here with Index Universe. Our organizations really share a desire to educate investors, and that's our goal today. And we do hope all of you who are listening walk away with a better understanding of the performance factors for leveraged and inverse funds. And as you pointed out, this is really a timely topic. The continued growth of leveraged and inverse ETFs, there are actually more than $30 billion in assets now, just demonstrates that investors have found them to be valuable tools. And if you've been following the financial media recently, you've probably been exposed to lots of information about them, and even some of that misinformation. For instance, you might have heard that compounding always kills the returns of leveraged and inverse funds. As you might guess, this statement is the misinformation category. And when we're done here today, I really hope you'll understand why. So here's to start with some quick background on leveraged and inverse funds, just to make sure we all have the same basic understanding. And then we'll talk about compounding, how it can help and hurt returns. Then we're going to talk a little bit about the recent volatility, which has had an effect on every type of investment product, not just leveraged and inverse funds. And then we'll turn to this historical study that Matt mentioned, trying to put performance in perspective. We looked at the effects of compounding over hundreds of time periods across a variety of market conditions over the last 50 years for the S&P 500 and 20 years for other indexes.